Intel is not a growth stock. Intel is not a momentum stock. Intel is not even a comfortable stock. Intel is a question. A question about whether industrial power still matters in a digital age. A question about whether execution can recover after years of failure. And a question about whether the United States can afford to lose its most important semiconductor company. This is not a story about quarterly earnings. This is a story about time, patience, and national strategy. Because Intel's future is no longer just about shareholders. It is about supply chains, artificial intelligence, and geopolitical survival. For decades, Intel did not compete inside the tech industry. It was the industry. Every personal computer ran on Intel. Every data center trusted Intel. Every software developer optimized for Intel architecture. Intel Inside was not branding. It was dependency. And dependency is the most powerful economic force ever created. Intel didn't need flashy innovation cycles. It didn't need marketing theatrics. It moved slowly, deliberately, and profitably. Wall Street loved it. Because Intel represented certainty. Moore's Law powered Intel's rise. But it also locked Intel into a dangerous promise. Smaller, faster, cheaper, every cycle. No excuses. As physics caught up with ambition, the cost of mistakes exploded. Each delay now meant billions in lost revenue, broken trust with customers, strategic openings for competitors. Intel's greatest strength, manufacturing leadership, became its most fragile dependency. While Intel stayed vertically integrated, the rest of the industry fragmented and accelerated. Designers outsourced manufacturing. Foundries specialized obsessively. Cloud giants built custom silicon. The industry stopped moving in a straight line. Intel stayed on one. And in technology, linear thinking is fatal. ARM did not outspend Intel. It outmaneuvered Intel. By focusing on design and outsourcing production, AMD gained flexibility Intel didn't have. NVIDIA did something even more dangerous. It didn't compete in CPUs. It created an entirely new category, AI acceleration. While Intel defended the past, NVIDIA built the future. Intel believed manufacturing excellence would save it. And for a long time, that belief was justified. But as delays stacked up, explanations replaced results. Markets are patient with vision. They are ruthless with excuses. Each missed node wasn't just a technical failure. It was a credibility failure. Intel didn't collapse. It faded. The stock stopped moving. Growth investors left. Value investors hesitated. Intel became something worse than a loser. It became boring again, but without growth. Turnarounds are not won with slogans. They are won with discipline. Patrick Gelsinger's return wasn't symbolic. It was structural. His message was blunt. No more excuses, no more fantasy timelines, no more pretending Intel would rebuild slowly, painfully, and publicly. IDM 2.0 was Intel admitting something critical. The old model was broken. Intel would open its fabs, compete with TSMC, become a foundry for others. This is not a pivot. It is a reinvention. And reinvention at Intel scale is brutally difficult. Foundries are capital furnaces. They burn money before producing value. They demand perfection. They punish mistakes mercilessly. Customers don't forgive delays. They leave. Intel entered this race late, which means Intel must be flawless. Chips are no longer commercial products. They are strategic assets. AI systems. Defense platforms. Economic resilience. The U.S. cannot rely entirely on overseas fabs. Intel's importance transcends its stock price. Government incentives do not guarantee success. They guarantee time. Time to build domestic fabs, train talent, stabilize supply chains. Intel's alignment with U.S. industrial policy is not accidental. It is survival. Intel is not trying to beat NVIDIA at GPUs. That battle is already lost. Intel's strategy is broader. CPUs, networking, memory, integrated AI platforms. Intel is betting on systems, not components. Systems age slower. Cloud giants fear dependency. They want multiple suppliers, pricing leverage, supply stability. Intel offers something NVIDIA cannot: optionality. Intel's margins are under pressure. Capital expenditure is enormous. Free cash flow is constrained. This is not a turnaround you trade. This is one you endure. Success for Intel does not mean dominance. It means on-time execution, foundry credibility, competitive relevance. Even partial success could radically change valuation. Failure would confirm structural inefficiency, cultural inertia, capital misallocation. Intel is not guaranteed survival, but its failure would reshape the global tech order. Sovereign funds, pension funds, governments, they think in decades. Intel fits their horizon. Retail impatience does not define Intel's fate. Turnaround investing is uncomfortable. It requires tolerance for boredom, acceptance of uncertainty, resistance to narratives. Intel will not reward impatience. It never has. Each update is a signal. Execution matters more than promises now. Intel no longer gets the benefit of doubt. Intel stock is cheap for a reason. The risk is real. The timeline is long. The outcome is uncertain. But uncertainty is where asymmetric opportunity lives. Intel may fail, or it may re-emerge as the backbone of American technological power. That uncertainty is not a flaw. It is the entire thesis. Intel is not a stock you watch casually. It is a story you follow. If you value deep, serious analysis, subscribe to the channel. And comment below. Is Intel the last great industrial comeback or the final chapter of a fallen giant?